Hello and welcome to Charting the Markets on Wednesday, the 20th of December 2023. The People's Bank of China maintained its lending rates steady at the December fixing, and the central bank continued basically to attempt to revive its spluttering economy. And it kept the one-year loan prime rate, which is the medium-term lending facility used for corporate and household loans, unchanged at 3.45% for the fourth consecutive month. And the five-year rate reference for mortgages was left at 4.2% for the new year. But more easing is expected to be seen next year. And that basically has led to Asian equity markets continuing to rise. And earlier this morning, we also had inflation data out of the United Kingdom, and it came in much lower than expected in November, with a drop to 3.9% in the headline inflation rate, down from 4.6% in October, and much lower than the expected 4.4% rise that was anticipated by market participants. Core inflation also dropped, not as much, but to 5.1% versus a forecast of 5.6% and a previous reading of 5.7%. So let's have a look at the impact this has had on the FTSE 100. And we can see here on the daily financial bet that we rallied very sharply this morning and briefly even rose above our September peak at 7,747. And if I zoom out onto a weekly chart, we can see here that we briefly traded at levels last seen in May of 2023, as we're trying to break out of this sideways trading range we've been in since then on this weekly chart. But as I said, this was only a brief foray into multi-month highs before the FTSE 100 came back down again, as you can see here, and slid back below its mid-October high at 7,702. So perhaps that spike higher is now what has so far been made, with the further sideways trading probably being seen over the days ahead and into the festive season. Now, if we were to rise above today's intraday high at 7,769, we could then retest the psychological 7,800 area on our way gradually towards the 8,000 mark. Perhaps possible if mining stocks and also oil and energy stocks were to continue to perform. But since that's not a given, and since the FTSE 100 is still this year a great underperformer compared to other European and US major equity indices, with it just being slightly positive at the end of this year, that is to say the FTSE 100, perhaps we will just sort of slowly grind higher as we've been doing since the end of October of this year. Support below today's low, which was made at 7,650, comes in along the November to December uptrend line here at 7,576. Also the 200-day simply moving average at 7,563. So yes, the FTSE 100 does look still bullish, but the fact that we've come off so quickly from our intraday high does lead me to believe that perhaps we will enter a sideways trading range in the near future. Now, the German DAX index has already started that. As you can see here, we had we reached a new all-time record high last week, just above the psychological 17,000 mark, and since then have traded in a sideways trading range and are being capped by this October to December breached uptrend line, which now, because of an inverse polarity, acts as a resistance line. And here you can see the DAX 40, which earlier this morning did try to rise a little bit higher, came off again as German GfK consumer confidence, even though it came in better than expected, remains at minus 25.1. And also year-on-year PPI data came in worse than expected at minus 7.9% in the German economy. So we can see here further consolidation likely taking shape. If we were to fall through Monday's low at 16,626, we may actually retest our July high at 16,532. But for me, that would probably be a good entry area to go long the DAX 40 contract, because as you can see here, the uptrend's been really strong. That's just a consolidation in a healthy uptrend. And I wouldn't be surprised if early next year we were going to retest the psychological 17,000 mark. Moving on to the US, we can see here that the S&P 500 is gunning for its all-time record high. If I move out onto a weekly chart, you can see here that was made back in January of 2022, around 4,817 on this daily financial bet. And we can see here that we are currently on track for our 8th consecutive week of gains in the S&P 500, something that we haven't seen since 2017. And basically the trend's your friend, and that's still pointing higher. The interesting thing is also that yesterday we had the Atlanta Fed Reserve President Raphael Bostic saying that there is a lack of urgency to remove the restrictive stance, and that was completely ignored by the financial markets, with the S&P 500 rising even more. And it instead focused on the Richmond Fed President Tom Barkin's comments that the US was making good progress on inflation. So all the positive news is being positively interpreted, with equity markets continuing to rise, and the negative news is just being set aside ahead of the festive season. Now, with regards to support, we've got the high seen on Monday around 4,750, which may act as minor supports together with last Thursday's high 4,739. But basically, the trend is still pointing higher for the S&P 500, and we should probably before the end of the year touch the psychological 4,800 mark. The US dollar hasn't done really that much over the last few days, but if we have a look at the British pound, what is interesting here is that on this morning's inflation data, the inflation data basically coming in much lower than expected in the United Kingdom at 3.9%. The British pound sold off versus the US dollar, as you can see here. So we remain below our November and December highs between 127.33 and 127.94, and are currently sliding back down again towards Monday's low at 126.29. And we'll have to see whether we can hold there. If not, we could actually retest our November to December uptrend line, which comes in around 125.67. And then below there, we've got really good support between the 200-day simply moving average here in red, and also the lows seen at the beginning of December between 125.12 and also 125, the figure. So these are potential support areas. For further upside to be seen, we would have to rise above yesterday's high at 127.62. If so, we will most likely take out the 127.94 high as well and head back up again towards the 10th of August high at 128.19. But right now, because of those lower inflation readings in the United Kingdom, the British pound has come off the US dollar. If we look at the Australian dollar, we can see that the Australian dollar continues to appreciate, as you can see here. We are currently on track for our 6th consecutive day of gains, and are now trading at levels last seen back in July of this year. And we have as a potential upside target that high from the end of July at 68.21, which is currently the next upside target, ahead of that high that was made back in July at 68.94. So here we can see the uptrend continuing now that we've risen above the early December high at 68.88, which should in future, in case of a minor retracement lower, act as support. The US dollar is also sliding against the Canadian dollar. As you can see here, we are now trading at levels last seen in August of this year, and have fallen through the September low at 133.81. And you can see here that we are now heading down towards the 131 area. There aren't really many downside targets short-term or support levels. I mean, there's one potential one here at the end of June at 132.85, which may potentially act as support together with the high seen in mid-July at 132.43. So that is a potential downside target area and support area. But basically, as you can see here, we are accelerating to the downside, and basically as long as we don't see a reversal to the upside taking shape, further downside is likely to be seen. And even if we were to see such a short-term reversal like we did, for example, at the beginning of December, it's probably only going to last a few days before the downtrend reasserts itself. The Brent crude oil price is on track for its 5th consecutive day of gains, as the Red Sea route for a lot of shipping companies is now becoming too dangerous, and some major players preferring to reroute their shipping around the Cape of Good Hope, and basically adding another 7 to 14 days of time it takes for the goods from China, for example, to reach the US or European markets. And you can see here the impact of that on the oil price is that we are heading towards the October to December downtrend line, and are likely to test it today around 80 and 80.66 on this futures contract, or $80.66 per barrel. And above there, we also have pretty good resistance coming in between the red line here, the 200-day simple moving average, and the orange line, the 55-day simple moving average, between $81.65 and $82.66. But from a technical perspective, provided we stay below the November high at $84.58, the long-term downtrend remains intact. Were we to rise above that high, then perhaps a medium-term reversal is likely to be seen. But right now, we are still continuing to head higher, even though US and UK Navy ships are now trying to protect the shipping lane in the Red Sea from Houthi rebel drone attacks. We'll have to see whether that will be successful or not. But so far, the oil price is rising on these events. Let me have a look at something different also today. And I spotted this chart here, the front month futures contract on corn. And you can see that the price of corn is slipping once again to its 471 low seen at the end of November. And basically we sort of tested the support area since July of this year, and so far have held. But if we were to fall through that low, I'd have to move out onto a weekly chart to show you. We would then be trading at levels last seen in December of 2020, and could be heading down towards the June 2019 high at 466.7. So that is the next downside target if this key support zone were to give way. Now, given the descent and the long-term downtrend since the high seen at the beginning of April or end of April of 2022, since that downtrend basically became a sideways trend, but the pressure from that downtrend longer term still remains, I wouldn't be surprised if in the next few days we were to slide through that support area, especially if volumes are thin over the Christmas period, and stops may get triggered that way quite easily. And last but not least, I'd like to mention another market we looked at a few weeks ago, and that was the price of front month sugar futures. So this is New York number 11 sugar, and we can see that these have come off very swiftly and dropped by about 25% from their 12-year highs made back in September 27.85, and so far dropped down to 20.56 before finding some support. You can see here ever so slightly some positive divergence on the relative strength index, not accompanying these lower lows on the daily candlestick chart, which may short term give us some respite and lead to the latest reaction high made on Friday at 22.14 to be eyed. Now, if that were to be breached, we could see a short-term reversal take us back up again towards the late August low at 23.30. But unless that happens, as long as we basically stay below 22.14, the high from Friday, this downtrend very much remains intact, and we could basically slip towards the psychological 20 mark. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on X. My handle is AxelR_IG.